Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan Grebner. With us is University of Missouri livestock market analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
I say we get right into it, and the big news of the week, the cattle on feed report came out today, and I don't think the report is what everybody else was expecting it would be.
Yeah, that's correct. We got some additional cattle placed in feed yards in December that we certainly probably didn't anticipate. You know, pre-report estimates for placed on feed in December range from 107.4 to 113.6, and USDA gave us a number of 117.6 today. So more cattle placed on feed than we anticipated in December, and we also sit here today now with as of January 1, 100.3% cattle on feed relative to a year ago, which also falls outside the upper range of on feed. So numbers on the cattle side bigger than we thought, and certainly probably is troubling for cattle prices here in the short term. I'm going to guess when markets open on Monday.
Scott, as we look at that report, there is one area, though, that is showing movement in the right direction, or what we need to see and what we've talked about we need to see in the cattle market.
Absolutely. When you look at the percentage of heifers of total on feed, they sit now at about 34%, which when you go back to 2015, we would have been setting more like 31%, and that 31% gave us enough heifers to grow the cow herd. So it is nice to see them higher. However, I remind us that it wasn't that long ago, and we could go back to 2012, and we would set at 38% of the inventory were heifers. So although we're moving in the right direction, we still may have a ways to go. And I guess when it's all said and done, all that data suggests to me that we're certainly slowing the expansion that we started, but we may not be over in terms of expansion on the beef cow side as well.
Scott, as we talk about this report, cattle on feed today, the next big report comes out on Tuesday, which is that cattle inventory report. We've not seen one for a year, and we're starting to get some of those pre-report estimates. How does that all weigh in, and what are we looking for on Tuesday?
Yeah, we are starting to see some of the pre-report estimates trickle in. It looks like to me that we are going to talk about more beef cows January 1 of 2017. I frankly have a little concern that the number is going to be bigger than many of us think once we see numbers from USDA next Tuesday. And so it could add more bearish sentiment to what we got from cattle on feed here on Friday. But it will be the first time in the year that we've really seen any information from USDA in terms of total cattle inventory or beef cow numbers in particular. So we will have to wait and see. I sometimes remind folks that one of the things that may confound what we get next Tuesday is if USDA has gone back and revised 2016 numbers as well, which they often will do. We'll have to wait and see what that means relative to January 1 of 2017. But I'm going to say we're going to continue to grow the cow herd, despite what I see from some folks out in the field who will tell me that there are fewer cows. Doing a cattle talk just last night and polling the audience, I could get a couple of hands to go up that said they reduced their herd, but I got about a dozen to go up that said they had grown their herd in the last year. So that may come through when we look at the report.
We'll definitely have to see what comes out on Tuesday. As we talk about it, the other report that came out today, and we'll get into some of those other proteins, cold storage. And there's some interesting figures in that cold storage report that we saw from USDA today.
Yeah, absolutely. So cold storage was out this week, and when you look at what we got out of cold storage, beef inventories 11% above a year ago, yet pork inventories were 13% down relative to a year ago. So overall, it is a decline in overall red meat stocks, but again, I say almost a very different situation in pork markets than beef markets. So not only are we talking about more cattle on feed, but we're also talking about larger inventories of beef in cold storage. When you start to turn to the pork side, the one that really sticks out is pork bellies that are at their lowest level ever. If you go back to 1973, at least, we've ever been this low in terms of pork belly cold storage. So it tells you that that's certainly been a driver when you've seen some of the strength that's been occurring on the pork side of the market.
Where is all the bacon going?
Everybody wants more bacon, it seems, and When you look at pork belly prices, for example, really surprising. So the highest level since October of 2015 just reminds me of how strong demand is. And so I think you and I have been on this conversation for a long time of, it's the additional supplies of beef and pork coming to market relative to the demand. And I think one thing we can say on the pork side is we've seen some pretty strong demand, and pork bellies in particular really sticks out.
It really is. We talk a little bit about it being a tale of two proteins. We're seeing a decline in beef prices, but we're still seeing the strength in the pork market. As we talk about that, how are exports playing a role in what's going on with the markets?
Yeah, I think exports have played a role when you look at, and it's really been strength of late in both sides, but I think we're going to continue to see that pork exports have been moving higher relative to year-ago levels. And so I think that's been helpful. And again, we continue to talk about the same thing all the time. We have a lot more supplies of both pork and beef coming to the marketplace in 2017, and we need to move a larger portion of those products outside the United States if we want to help on the price side of the equation. And it's just critical we grow exports in 2017.
Any big surprises in the market this week as we look at how things ended up?
Not really. So we did see hog prices that were a couple dollars higher for the week. On the cattle side, we've probably been relatively flat on fed cattle prices for the week. Futures prices for both fed and feeders were down a couple of dollars relative to where we started the week. On the feeder cattle side, it seems like we started the week relatively strong. You could see quotes with some higher prices, but we've certainly trailed off and been lower as we've gone through the week. So it hasn't been a lot of change, I guess, when we look at where we've seen markets this week.
I think we talk a little bit about exports and we talk about support to the markets. Another big move this week, last week we saw, or earlier this week, we saw the official disengagement of the U.S. from the Trans-Pacific Partnership Trade Agreement, and discussions again surrounding either renegotiating NAFTA or reopening NAFTA to modernize it. How worrisome is it, especially for the fact that Mexico is the #1 importer of pork and pretty high up there in beef as well?
Yeah, so it is worrisome, and I like to remind us that when we look at these, both TPP and NAFTA, that we look at them differently. So NAFTA very much could be a short-term issue for us. Mexico already, as you said, a market for pork that's #1, a market for beef where we've been 2 or 3, depending on where we've been the last couple of years. And if we talk about a slowdown or stoppage of product moving into Mexico, that's probably one of the things we don't want to see happen this year in terms of lower prices for both beef and pork. Whereas on the TPP side, I like to remind us that's a long-term move that we need to be worried about. So years in front of us that we're trying to set in motion. So renegotiating TPP in the short run probably doesn't mean nearly as much for us as, again, that worrisome if we could no longer talk about product moving south. Now, maybe at the same time on the cattle side, we'll see fewer feeder cattle coming across from Mexico, and we'll have a little bit of balance there. But for hogs in particular, Mexico's been a very, very important market.
Anything else we need to think about as it comes to some of these trade issues and maybe as we talk about bilateral trade agreements, and does that even give us opportunity, especially if we look at a country like Japan?
So I will say, anytime we talk about trade and we talk about at least a reduction in trade barriers, I think in many cases that's very positive for us in cattle and hog markets. We tend to have a comparative advantage in many of these livestock components. We're close to feed sources in many cases. And so I think it's all good in terms of what happens to the United States from trade. And sometimes I like to remind us, if you think about today where we stand, fairly large tariffs for U.S. beef going into Japan. We can talk about, anywhere from 35 to 40%, depending on the product. Yet, when you think about what Australia faces going into Japan today, probably more in the 25% range. And with their recent bilateral, that moves to 9 fairly quickly. It tells you we need an even playing field in terms of those ag commodities. And it's going to be important that we continue to stay focused on the trade side. And again, I will say all the time, a larger proportion of the population in this world resides outside the United States. that growing population is also going to be some that have the strongest income growth in front of us, and strong income growth from a lower level. So putting another dollar in their pocket means they'll spend a larger proportion of that dollar on maybe meat protein, maybe beef, maybe pork. All of that is where I think the growth for us in demand comes longer term.
Scott, as we wind down the month of January, that March prospective plantings report is just a couple of weeks away, or closer than we can actually think about. I can't believe we're headed into the second month of 2017. So as we prepare for that, are we starting to maybe gauge and guess where things might end up and what that means for input prices for livestock producers around the country?
Yeah, so we're starting to see a lot of pre-report estimates come out in terms of corn and soybean acres. I think on the soybean side, it's the one that's been most variable when you look at what pre-report estimates have been saying. I've seen north of 90 million acres of soybeans in some of those reports, and others setting around 88 or 89 million acres of soybeans. So it looks like, number one, we'll get a lot of soybeans in the ground. On the corn side, we will be down in terms of acres relative to where we were. I see a lot of folks setting around that 89 to 90 million acres of corn. I think if we get that amount of corn in the ground and we have a decent year, we're going to keep corn costs relatively cheap. So I think that all bodes well. But of course, as you and I both know, it's going to depend on where we see weather here in the spring in terms of what we ultimately plant, and a lot of concern about just how much switching can occur just given normal rotations and where folks are going to move. I hear a lot more discussion about soybean acres being a lot higher, with folks deciding to pre-sell a lot of those beans earlier than maybe we would normally think of. So we'll wait and see, but right now I think input costs stay under control unless we have a severe weather event unfold in 2017.
And I think South America might come into play a little bit there too, especially with what losses that are projected in that Argentinian soybean crop.
Absolutely. Yep. I think that's where we're seeing some strength as we continue to try to monitor where that crop ends up at the end of the day.
Scott, anything else?
I think we've covered most of it for this week, and certainly going to set the stage for cattle markets when we get cattle inventory report next Tuesday.
We will have plenty to talk about next Friday. Good to see you.
Good to see you, Megan.
As always, if you have questions for Scott, send us, or you can go to our website, brownfieldagnews.com, and click on the Ask a Question here, which you can find by our weekly livestock market update. You can also subscribe to have it delivered to your email box every Saturday morning. Go to brownfieldagnews.com. Have a great weekend. I'm Megan Grebner on Brownfield.